Hello everyone, it's Amir Safa, Senior FX Consultant at Worldwide Currencies. I'm going to run you through what happened to the pound, euro and dollar over the course of last week, so let's just jump right into it. So firstly, we've seen the pound strengthen quite a bit. So when Brexit talks were extended from the end of last weekend to the end of this coming weekend, we saw a positive movement for the pound upwards against both the euro and the dollar. That theme has carried on over the course of this week and the pound has performed quite well recently. However, since yesterday afternoon, and also this has carried on through to this morning, we've seen a slightly weaker pound, slight retracement, because Boris Johnson mentioned that a no-deal Brexit is still the most likely outcome. Both sides acknowledge that progress has been made on many issues. However, they both say that there is a very narrow path towards a deal. So the market's focus is going to be whether or not a deal can happen, if there's going to be an extension of trade talks again. But for the time being, the pound has performed quite well, albeit we've seen a slight retracement against both the euro and the dollar. So on to the euro now. Generally, it's been quite strong. This is off the back of what the European Central Bank have done in terms of their monetary policy measures that they introduced recently. However, the focus is now shifting towards Germany. So they've announced over 33,000 new coronavirus cases just today. They've also entered a hard lockdown until January. What does that mean? Well, the market is really going to be focusing on economic data coming out from the Eurozone and from Germany to see how they cope with the hard lockdown and with the increased number of cases. So depending on how data comes out in the next couple of weeks, we can definitely see a more volatile euro. On to the dollar. It's been still quite weak. It has been for the last few weeks. There's a clear lack of demand for its safe haven status. Since the vaccines have rolled out, that's continued. And to evidence this, the Financial Times have actually mentioned that foreign investors are putting their money in emerging markets at its quickest pace since 2013. So it shows that people are taking a little bit more risk in this climate. If you compare that against the start of the pandemic, it's the complete opposite, where the dollar was really strong and we saw a lot of demand for the dollar because of investors putting their money in dollar-denominated bonds as a safe, fairly risk-free investment. In addition, the US fiscal stimulus package that has been negotiated for months now looks like it's coming to an end. It seems as though the Senate want a deal to happen as soon as possible, and that will help households and businesses. However, because there's going to be more dollars floating in the economy, it means that each one is worth less. So that's why we've seen a weaker dollar as well. So overall, we've seen a stronger pound with a slight retracement recently. We've seen quite a strong euro, although it's susceptible to volatility. And we've seen a fairly weak dollar as well. If you enjoyed this video, please like and subscribe. And Merry Christmas, Happy Holidays, and Happy New Year to you all.